The revenue account start with the premium, then there's a income, then commission, then operating expenses, then benefit paid. Which are the four divisions are? One is the claim, second is the bonus, third is the surrender, fourth is the annuity. By chance on loans or policy, some surrender amount will be adjusted. If they say no, that should be deducted. Loans on mortgages. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram, First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Corporate Accounting First Semester Unit 2, Session 1 in favor of Final Accounts of Life Insurance Company. Every insurance company, as per the Insurance Company Act, they have to prepare final accounts. Final account which contain revenue account and the balance sheet is a compulsory at the end of the year. So what is the format of the today? I am going to explain first what is the format of revenue account, what are the format of what's called balance sheet. One by one I am going to explain now. If you see that first revenue account, first we have got a premium, then we have got a commission, then we have got a, so here the revenue account start with the premium, then there's a income, then commission, then operating expenses, then benefit paid. In the benefit paid, you have got a four division. One is the claim, one is the bonus, one is the surrender, one is the annuity. Which are the four items are? One is the claim, first is the bonus, then first is the claim, second is the bonus, third is the surrender, fourth is the annuity. These are all the expenditure. B is an expenditure, A, B. So, revenue or profit or loss, A minus B. If there is any dividend is there, the dividend should be deducted. This is a format. So, now I am going to explain what are the premium it contains. So, here, premium received as per the trial balance. They will give the trial balance. The trial balance shows debit side and the credit side. So, what are the items I will explain now? Premium received. Debit side is expenditure, credit side is the income, debit side is the asset, credit side is the liability. What is that? Trial balance. First, we have got a journal entry to ledger, ledger to trial balance to revenue account. So, debit side, credit side. Debit side is an expenditure, credit side is income, debit side is the asset, credit side is a liability. So, here, the income of the insurance company is the premium. When I insure, I have to pay the premium. Life insurance is for a long time, whereas general insurance for 1 year, it is a long time, maybe 30 years, 40 years. So they make the insurance so for 30 years. Either the death or the maturity, whichever is earlier, before the due date, if the particular employee dies, so the amount goes to their what's called next man. So whatever the name they have mentioned, then the name what's called nominees we say, it will go to their nominee. So premium received, outstanding premium as per the adjustment should be added. Further bonus utilized in reduction of premium should be added. Income, dividend, consideration for annuities granted. Income from investment should be added. Income, dividend. Outstanding premium should be added. Further bonus utilized should be added. Premium, then any income that should be added. Consideration for annuities granted. Income from investment is income. So this will come under schedule number 1. Schedule number 2 is commission paid. Yeah, by chance in exam, for a commission, if the C date is given, that should be deducted. Accepted should be added. Commission minus commission C date should be deducted. Commission accepted should be added. Accepted means paid. Then you have got number 3 here now. First is the premium, second is the commission, third is the operating expenses or management expenses. Operating expenses, management expenses, division on fixed asset. If the medical fees also come, that should be added here. So management expenses, any outstanding that should be added. Deduction on fixed asset, medical fees, any other expenditure. Now, regarding this benefit paid, schedule number 4. In that 4 divisions are there. Which are the 4 divisions are? One is the claim, second is the bonus, third is the surrender, fourth is the annuity. So 4 items are there. I will explain them. Claims. Claims by death, claims by maturity, this should be added. Claims admitted but not paid in the adjustment should be added. Last year claims should be deducted. This goes in favor of the claims. By chance, if the claims are covered, that should be deducted. Surrenders. Outstanding surrender should be added. Further surrender adjustment to be added. Bonus in reduction of premium. Further bonus in reduction of premium as per the trial balance. Further bonus declared as per the adjustment. Annuity, you in the insurance, just like what's called bank, here also money will be put in the insurance company. So they may put some amount. Every month they have to receive the interest. Annuity, once in a year they can get back their money. This is where annuity is income. So 4 items, claims made. So benefit paid, 4 items. 1. So benefit paid. Schedule number 4. First is the claims. Second is the bonus. Third is the surrenders. Then fourth is the annuity. So which are the 4 items are? One is the claim, one is the bonus, one is the surrender, one is the annuity. These are all the items under 4. Now, number 5, share capital, whatever the amount means. If there is any calls in arrears, that should be deducted. Then, schedule number 6, reserve and surplus, life assurance fund. Given life assurance fund in the trial balance, add reserve and surplus. So, reserve and surplus is a heading. In that, life assurance fund plus surplus should be added. So, this is schedule number 6. 7 is borrowings. So, borrowing means debenture, long-term loan. We borrow the debenture, we borrow the long-term loan. 7th one. 8th one, investment, house property, leasehold, investment in government security. So, if they give an investment, you have to take. House property you have to take. Leasehold ground rent you have to take. Government security and private security also there. 9th one, loans. Loans on policy, loans on mortgages. By chance on loans on policy, some surrender amount will be adjusted. If they say no, that should be deducted. Loans on mortgages. So format you have to learn. 10th one, fixed asset, building, freehold premises. 11th one, cash at bank balance, cash in hand and current account, cash at bank. Then 12th is the current asset, outstanding premium from the adjustment, interest accruing either from the trial balance or adjustment, agent balance debit, deposit debit, debtor and TDS, what's called interest and discount tax on above is TDS, claims covered from insurance, advance tax. Then schedule number 13, current liabilities, outstanding claim from the adjustment or any claim in the trial balance end of the year, creditor, outstanding management expenses, further claims, annuities due but not paid, surrender due but not paid. So these are all the items for all the problems will come. Now, balance sheet. So, share capital, schedule number 5, reserve and surplus, schedule number 6, borrowing, schedule number 7, application of funds, investment is 8, loans is 9, fixed asset, then cash at bank balance and current asset. So, liability should be equal to asset. This is only a liability item. So, first you have to remember such a way that you have to prepare the revenue account. What are the items are in the revenue account? One is the premium, one is the commission, one is the operating expenses, number 4 is the benefit paid. So what these items contain in the premium, what are the items will come? That I will explain now. We'll go back. So here, they will give the trial balance and adjustment. So treatment of adjustments. This you have to learn. Treatment of adjustments. Number 1. Outstanding premium. All adjustments should come twice. All adjustment should come twice. If there is any outstanding premium adjustment, they should be added to premium schedule number 1. Then it will come under current asset. Where it will come? Outstanding premium should be added to premium schedule number 1. Then current asset. Number 2. Outstanding claims. Outstanding claims should be added to claims in the schedule number 4, benefit paid. Then it will come on the liability side of the balance sheet, where the outstanding premium will come under schedule number 1 for a premium. This should be added. Then it will come in the schedule number 13, that is 12, current asset. Outstanding claim, that should be added to claim in the schedule number 4. Then it will come on the current liability schedule number 13. Then surrenders due but not paid. Surrender dues but not paid. It should be added to surrender in the benefit number 4. Then it will come on the liability side of the balance sheet, schedule number 13, current liability. Outstanding premium should be added to premium schedule number 1. Then it will come under current asset, schedule number 12. Outstanding claim should be added to claim in the schedule number 4 in the benefit paid. Then it will come under current liability, schedule number 13. Surrenders due but not paid. It should be added to surrender in the schedule number 4. Then it will come on the liability side of the balance sheet. Claims covered under reinsurance. So it should be deducted from the claims. Now what will happen now? If we have got an insurance company called X, X is called one insurance company. Somebody comes and make the insurance to the tune of 1 crore. So X company accepted that insurance, but they will pay heavy premium. Now we have got a fear, if something happens for the particular person who has been insured, you have to pay back how much money? 1 lakh. It is not easy for the insurance company. What the insurance company will know? Out of this 1 lakh, they made 50 lakh with another insurance company called Y. X company will make the insurance with Y to the tune of 50,000. Whatever the premium that he is going to pay, out of the premium, 50% will go to Y. So I already explained outstanding premium. I already explained outstanding claim. Regarding the surrender, it should be added to surrender. Then it will come on the liability side of the balance sheet. Claims covered under insurance. I already told, if somebody will come and make the insurance with us to the tune of 1 lakh, 1 crore, assume that we have a fear, for 1 crore he will pay the premium, it is an income for us. But if something happens, you have to pay that. For this 1 crore, you have to pay back. So that the insurance company, what they will make the reinsurance with Y company. So whatever the premium you paid, 50% goes to him, 50% remains with us. But when the claim comes, we feel happy that whatever the claim they made, out of that 50% we will pay, another 50% will be paid by way. That is claims covered under reinsurance. Deducted from claim on the asset side of the balance sheet is income. So how to treat outstanding premium? Should be added to premium and asset side of the balance sheet. Outstanding claim, it should be added to claim on the liability side of the balance sheet. Surrender due but not paid, add to surrender in the schedule number 4, then liability side of the balance sheet. Claims covered under reinsurance deducted from claim and the asset side of the balance sheet. Number 5, management expenses due. Outstanding. Add to management operating expenses in schedule number 3. Add to that management expense, then it will come on the liability side of the balance sheet under schedule number 13, current liability. So generally these are all the 5 items. There may be one more item. They may say that 6th one, surrender adjusted against loans on policies. So when he is not in a position to pay the premium, he will surrender. Some money we are going to pay for surrender. Whatever the surrender comes, that will be adjusted to loans. He has to pay the loan on loans or policy. That amount should be deducted. Assume that about this 4,000. First, where the 4,000 will come? Under surrender. That is on the benefit paid. Under surrender, how much money will come? 4,000. When you make the loans on policies, here, under the loans on policy, schedule number 9, that amount should be deducted. Sometime, whatever the adjustment we made on the loans policy, that should be deducted. These are the common adjustment which you are going to read. Very simple. Only you have to learn the format. So general adjustment I have explained. I will go once again. Outstanding premium, add to premium, and it will come under current asset. Outstanding claim should be added to claims in the benefit schedule number 4. Then it will come under current liability schedule number 13. Surrenders due but not paid, it will come under schedule number 4. Then it will come under current liability. Claims covered under reinsurance, it should be deducted from the claims in the benefit 4th one, then it will come under current asset. Management expenses due, it should be added to operating expenses, then comes on the liability side of the balance sheet. Surrender adjusted against it will come under surrender. Then it on the loans on policy, schedule number 9, it should be deducted. So what the format says, you have got in the revenue account 4 items. One is the premium, second is the commission, third is the operating expenses, fourth is the benefit paid. In the benefit paid, we have got 4 items. One is the claim, one is the bonus, one is the surrender, one is the annuity. Which are the 4 items are? One is the premium. So first is the premium is the one. Then schedule, which are the 4 schedules in the revenue account? Premium is the 1, commission is the 2, operating expense is the 3, benefit is 4. In the benefit, we have got 4 division. One is the claim, one is the bonus, one is the surrender, one is the annuity. Then 4 items are go. Then balance sheet item, we have got schedule number 5, share capital. Schedule number 6, reserve and surplus. Schedule number 7, borrowings. Schedule number 8, fixed asset. Schedule number 5, share capital. Schedule number 6, reserve and surplus. Schedule number 7, borrowings. See that? Share capital is 5. 6 is reserve and surplus. That is the reserve and surplus. 7 is the borrowings. Here see the debenture line. Schedule number 8 is the investment. Schedule number 9 is the loan. Schedule number 10 is the fixed asset. Schedule number 7 is the cash at bank balance. Schedule number 12 is the current asset. Schedule number 13 is the current liability. This you have to learn properly. Sometimes 14 is the 14 is the provision, 15 is the miscellaneous expense. Slowly I will do. Premium is the 1, commission is the 2, operating expense is the 3, benefit paid is 4. Then balance sheet schedule, share capital 5, reserve and surplus 6, borrowing 7, 8 is the investment, 9th is the loan, 10th is the fixed asset, 11th is the cash, 12th is the current asset, 13 is the current liability. Then I explain all the adjustment here. How to treat outstanding premium should be added to premium, and then asset side of the balance sheet. Outstanding claim, add to claim in the 4, then it will come on the liability side of the balance sheet. Surrender due but not paid, add to surrender, the schedule number 4. Then on the liability side of the balance sheet, claims covered under insurance, deduct from the claims, and it will come under current asset. Management expenses due, it should be added to management expenses, schedule number 4. This is operating expenses. Actually, management expenses is nothing but operating expenses. That is schedule number 3. Then it will come on the current liability, schedule number 13. Surrender adjusted, schedule number 4. First, in the benefit, surrender will come. Then it will adjust a loan on in the 9th item on the loans on policy that should be deducted. Very careful. So, what is the schedule for revenue account? 1 is the premium, 2nd is the commission, 3rd is the operating expenses, 4th is the benefit paid. Then we'll enter to balance sheet. Schedule number 5 is the share capital. Schedule number 6 is the reserve and surplus. Schedule number 7 is the borrowing. 8 is the investment. 9th is the loan. 10th is the fixed asset. 11th is the cash. 12 is the current asset. 13 is the current liability. Pakka format you have to run. First you have to prepare the revenue account. Once the revenue account is over, then you have to prepare the balance sheet with all adjustment. All the item come. If any outstanding comes on the beginning of the year, any outstanding claims comes on the beginning of the year, that should be deducted. Which chance only claims is given directly on the liability side of the balance sheet. Here no, we'll give the trial balance by chance. Debit, debit, then credit. Hey, by chance, outstanding claims on 1/4 is given here. This should be deducted from the claims, but only outstanding claim is given directly on the liability side of the balance sheet. Adjustment, if the outstanding claim is given the adjustment, add to claim, then liability side of the balance sheet. This you have to learn. While you are solving the problem, I will explain once again. I have explained the revenue account, I have explained the balance sheet, I have explained the adjustment. So, while you are solving the problem, while you are dictating, if any comment is made, that will be answered. So, here, first learn the revenue account format, learn the balance sheet format. Once you learn it, when you enter to the what's called problem, this becomes easy. Hope you understand this format. We'll go in the next session with the problem. Till then, goodbye. Meet in the next session with the problem.